The 2026 outlook for Bitcoin is shaped by several pivotal interconnected forces: evolving regulations, deepening institutional integration, and broader macroeconomic trends. Here are the key developments and what to watch for. Price trajectories and economic drivers. Key driver, Federal Reserve monetary policy, potential new Fed chair, liquidity conditions. Key event, potential passage of the Clarity Act, crypto market structure legislation. Analyst price outlooks range from cautious to highly bullish. Bearish scenario, potential pullback toward $50,000 if macro conditions tighten. Base or bullish scenario, new all-time highs with targets between $125,000 and $148,000. What to watch: Fed rate decisions, U.S. political climate, and the progress of key legislation. Regulatory and institutional adoption. Key driver, regulatory clarity enabling traditional finance integration. Major trend, institutional capital flowing vertically via ETFs, bank services, and corporate treasuries. Notable predictions: over 100 new crypto-linked ETFs in the US, and half of Ivy League endowments investing in crypto. What to watch: SEC guidance for broker-dealers, OCC bank charters, and new financial products from major banks like JP Morgan. Key investing themes for 2026. Stablecoins as infrastructure, becoming the internet's dollar for payments and settlement. Real-world asset tokenization, moving mainstream for equities, bonds, and private assets. AI and crypto convergence, autonomous agents requiring programmable on-chain payments. Demand for on-chain privacy, rising institutional use driving need for confidentiality solutions. What these trends mean for you. The themes above suggest a market that is maturing but also becoming more complex. For investors, the potential inclusion of crypto in 401k retirement plans is a significant underappreciated driver that could unlock massive, steady capital inflows. For everyone, as crypto integrates with traditional finance, understanding ongoing risks from technological vulnerabilities to regulatory gaps is crucial for safeguarding assets. The current market context, a volatile crossroads. As 2026 begins, Bitcoin finds itself in a period of significant transition. After surging to a new all-time high of around $126,000 in October 2025, a sharp correction has seen its price fall back to levels around $87,000 to $90,000. This late 2025 pullback has been attributed to a mix of macroeconomics, aggressive investor leverage that amplified losses, and a market recalibration. It's a reminder that crypto remains a volatile asset class, and this recent turbulence has set a complex stage for the year ahead. The core pillars shaping 2026. 1. Institutional adoption, the dawn of the institutional era. The single most powerful narrative for 2026 is the continued and even accelerated entry of institutional capital. ETF evolution. The Bitcoin spot ETFs launched in 2024 are seen as a permanent gateway. Analysts expect steady inflows to resume, with firms like Grayscale predicting a new all-time high in the first half of 2026, driven by this institutional demand. Some believe this could mark the end of Bitcoin's traditional 4-year boom-bust cycle. Wall Street's deep integration. Major banks are moving beyond custody. For example, JP Morgan is reportedly planning to allow institutional clients to use Bitcoin and Ether as collateral for loans, a significant step in integrating crypto into traditional finance. Government and corporate treasuries. The U.S. established a strategic Bitcoin reserve from seized assets, and states like Texas are creating their own reserves. Publicly traded companies continue to add Bitcoin to their balance sheets. 2. The macroeconomic chessboard. Interest rates and policy. Bitcoin's performance in 2026 will be heavily influenced by the macroeconomic climate. The Federal Reserve's interest rate policy is a critical lever. there's growing expectation that the Fed may cut rates in 2026, particularly if economic data weakens. Historically, lower interest rates and increased liquidity have been supportive for Bitcoin's price. A potential change in Federal Reserve leadership in 2026 could also shift monetary policy focus, which some analysts believe would increase Bitcoin's appeal. The U.S. midterm elections in November 2026 are expected to be a major source of market volatility and uncertainty in the third quarter. 3. Regulatory clarity, from uncertainty to framework. After years of ambiguity, 2025 saw landmark legislation passed with the Genius Act, which set clear federal rules for stablecoins. The focus for 2026 shifts to the potential passage of the Clarity Act, a bill aimed at clearly defining which digital assets are securities and which are commodities. Its progress is seen as a key potential confidence booster for the institutional market. Diverging price forecasts for 2026. This interplay of factors has led to an exceptionally wide range of price predictions, reflecting deep uncertainty about the near-term path. To help visualize this divergence, here are the major price clusters. Mega bullish, $200K to $250K. Key proponents, Cardano's Charles Hoskinson and investor Robert Kiyosaki. Rationale, based on Bitcoin's fixed supply acting as a hedge against fiat currency instability and a continued surge in institutional adoption. Upper mid institutional targets, $150,000 to $189,000. Key proponents, JP Morgan at $170,000, Standard Chartered at $150,000, Bernstein at $150,000, and Bitwise's Catherine Dowling at $150,000. Rationale, a conservative revision from earlier, more aggressive targets, focusing on sustainable ETF inflows and regulatory progress rather than speculative mania. Cautious and consolidation scenarios, $65,000 to $125,000. Key proponents, Fidelity's Jurrien Timmer, Swan Bitcoin's Corey Clipston. Rationale, views 2026 as a potential year off for consolidation within Bitcoin's long-term cycle, with prices trading in a range to build a new base. Bearish risk scenarios, $10,000 to $70,000. Key proponents, analysts like Peter Brandt and Bloomberg's Mike McGlone. Rationale, warns of a major mean reversion if speculative demand fades, liquidity tightens, or if long-term technical patterns break down. Technical analysts also point to the risk of a deeper drawdown toward $40,000 to $70,000 if historical bear market patterns repeat. Options market sentiment. Reflecting this uncertainty, derivatives markets are currently pricing in roughly equal odds of Bitcoin being at $70,000 or $130,000 by June 2026 and $50,000 or $250,000 by the end of the year. Broader industry trends beyond price. The institutional shift is driving profound changes across the crypto ecosystem. Stablecoins become financial infrastructure. With clear regulations, stablecoins like USDC are poised to overtake legacy systems like ACH in transaction volume, becoming the internet's dollar for global payments and settlement. Real-world asset tokenization goes mainstream. Expect a major bank or broker to begin accepting tokenized equities, digital shares of Apple or Tesla, as collateral for loans, bridging DeFi and traditional finance. Continued institutionalization, activities like mergers and acquisitions, venture capital investment, and the formation of specialized crypto banks are expected to accelerate, signaling market maturation. Conclusion. 2026 is shaping up to be a year where Bitcoin's long-term bullish fundamentals around institutional adoption clash with near-term macroeconomic and political risks. The market is in a battleground state between those who see a new structural bull market and those anticipating a traditional cyclical correction. For investors, this underscores the importance of a long-term perspective, focusing on the irreversible trend of institutional integration while being prepared for significant volatility along the way. Would you like a deeper analysis of any specific trend mentioned, such as the mechanics of Bitcoin ETFs, the details of the Clarity Act, or the technical indicators analysts are watching?